Welcome back, and today we got something really exciting. We passed through the Armageddon of yesterday, and it was red hot, and I kind of feel very peaceful at the end of the CPI results announcement. I do not know how you guys are, but let me hear from you on the live chat right here on YouTube. Please type in your comments at the live chat. Let me know how you survived yesterday. Yesterday was a big day of survival, and I think we did pretty well because I had trade through the night session together with my students, and we had a great time. We traded until about 4 a.m. this morning, Singapore time, and then I went on to trade further until about 6 a.m. Right, so I stayed until about 6 a.m. By the time I jumped into the bed, that's about 6:30 a.m. this morning. So right now I'm alive and kicking. Okay, welcome. I see Kelvin, welcome. Jacqueline, good to see you. Rose, good to see you. Yes, welcome to all of you. And today's session is going to be pretty interesting. It's kind of I want to do an analysis of what happened yesterday, and then we walk away with one interesting idea. All right, every single day for the 100-day stock market inspiration, I will give you one inspirational idea, and hopefully you can profit from it. Okay, so here we go. Inflation rose 9.1% in June, even more than expected as consumer pressures intensify. Now this is like a big record, 40 years record. Previous month was 8.6%, right now at 9.1%. I mean, it's kind of mind-boggling because most of you are not seeing the data as the way you should see it. And let me explain to you what I meant by you should be looking at the data as the way you should see it, all right? So let me mouse over here and show you what exactly I'm looking at. This will change your view, okay? So right over here, this is official from the US Bureau of Labor Statistics. And right across here, below, this is what we call the inflation or the consumer price index inflation data. And of course, you can mouse over here, kind of play with it. The moment it kind of surpassed 5%, that was the alarm bell. But kind of we were all smoked by the government. We were smoked by President Joe Biden. We were smoked by Fed Chair Jerome Powell. We were smoked by Treasury Secretary Janet Yellen. All three of them claim that everything is under control, and that the worst nasty word, ugly word that birthed out of last year was this word called transitory. So everything is under control. This is transitory, well managed. Today, we have confirmed, and not just today, all right? I mean, for the 6 months this year, we have confirmed it has completely been mismanaged. Look right over there. We started all over here in May 2021, first time it touched 5%. Alarm bells should be ringing everywhere. Unfortunately, when the media and the narratives keep bombarding you, telling you it's okay, you're kind of being sidetracked. And many people caught off guard. I'm telling you, literally on the data side of things, we see the insiders, the money managers, the sovereign wealth funds, the hedge fund family officers, all caught off guard, all right? Because you don't see like major sell-off. What you see is money keep plowing back into the market. So started from May 5%, June 5.4%, August 5.3%, September 5.4%, October 6.2%, November 6.8%, December 7%, January this year 7.5%. And January, they had that chance to raise interest rate. They told everybody, no, is everything under control, we do not need to raise interest rate. February, they don't have the window, went to 7.9%, March 8.5%, then they wake up. March, for the first time, they introduced a 25 basis point. Then April, March, April, that's where you're 8.3%, then they introduced 50 basis point. May, that's where they introduced 8.6%, they introduced about 75 basis point, all right? So right now the June data is out, 9.1%. What is the interest rate headed to? this is what everybody is really concerned about, because there are two steps to it. Step one is to look at the inflation data, which is a lagging indicator. Everybody knows that it's a lagging indicator to begin with. Then step two, based on the inflation data, they look at FOMC based on the minutes window, when and how would they increase the interest rates to tame the inflation. So right now at 9.1%, what do you think? Collectively, our interest rate, holy moly, we are collectively at 1.5%. And that is really mama, right? I like to use the word mama. Kind of inspired by who? Mama is inspired by the mama stocks. All right, so let me show you this one. It's kind of boggling. Nope, wrong data. One more time. Let me show you another data right here. This is mind-boggling, right? So here we go. This was what exactly I was sharing about just now. And let me just kind of zoom it even bigger, right? Oops, my mouse is kind of hang on me. Okay, so now you can see really beautiful, okay? Here we go. March. February, we didn't have a window. March went on the 25 basis interest rate increase. April, we didn't have a window. May, 50 basis point, that's 0.5%. Then June, went on to the record 75 basis points. So when you add these three together, that's 1.5%, all right? So what is the meaning of 1%, 1.5%? It means majority of you out there, you are servicing a mortgage loan, including myself. A mortgage loan for the properties that we buy. Now, nobody in their right mind will buy properties with 100% cash down, right? I know a few people that do that for many other reasons that cannot be spoken on a YouTube. So majority, just take assumption that majority of us buy properties by borrowing money from the bank. We call it a mortgage loan. And if the FOMC is 1.5%, you just add another 3%, you are hitting with 4.5% to service your mortgage today. And it also depends on when you entered into the mortgage loan agreement with your bank. Was it last year, the year before last year, or this year, or now? That's it. You are going to be hit with very high mortgage rates. That's taking out more cash from your savings or from your earnings. So if the last time round is 75 basis point, which is 0.75%, this time round they want to do a really do-re-mi, fa-so. What do I mean by do-re-mi, fa-so? 25, 50, 20. You just add 25 onwards, right? 25, add 25, 50. 50, add 25, 75. 75, add 25 will be 100 basis points. Is it just my own imagination? I show it to you right now, baby. Here we go. Traders are betting the Fed, holy moly, could raise interest rate by 1% this month. That has already been spoken in the market. And it will become a self-fulfilling prophecy. Now, if at 1%, you add to the 1.5% that I covered with you just now, you're hit with 2.5% plus minus another 3%. You're going to pay 5.5% just to service your mortgage loan. That is painful. All right, I'm not too sure where you are and what's your financial situation, but 5.5% is painful because, let me tell you to begin with, right now there are no instruments out there that can pay you 5.5% return per year. Nothing. All right, in the good old days when I was trading after the subprime crisis, 2008, 2009, all right, we were buying bonds that pay us like 8.8%, 9%, 12% per year. So those were the good old days. There were instruments ready to pay out really high interest rates. This time around, the market is kind of get killed off, right? It's a very low interest rate environment. Your savings rate, the best, or actually I call it the number one bank in the world, is only paying you 0.05% interest per year for money kept with the bank. My friends in US got worse off. you are paid 0.01% per year for your savings rate. Now, how are you going to manage when the interest rate, they're going to raise to 1% and hit us with a total 2.5%? It is going to be painful. Bloodshed everywhere, all right? So this is the big topic that was happening yesterday. We traded through the night, and of course, at the beginning, there's so much volatility. And at the opening bell, 9:30 a.m. Eastern Time yesterday, the market was bloody red. It was as red as my red t-shirt. I want to wear this today to remind all of you, market was blushed. Blood was splattered everywhere at the opening bell. But by the time it hit about 11 a.m. Eastern Standard Time, that's 11 p.m. Singapore time, the kind of market kind of start to grow positive, but not very, very positive. We know that there are a few signals, and I can tell you off my memory right now, 3 things. Number one, everybody believes that I think we have hit the peak of the inflation rate. 9.1, I think, is the highest it will go, and from this point onward, it should start to dwindle down, all right? Number 2, everybody also believes that the Fed wants to raise the interest by 100 basis points, which is 2 weeks from now, 27th of July. So you got 2 things right now happening. Number 3, and everybody believes that we are officially in a recession. So you are in a dire situation. No instruments out there can generate the kind of returns for you. And that is where this moment in time, you got to become a self-directed investor and make money on your own conditions. But the problem is this. Most of you are not equipped with know-how and the data. There are 3 things that you need to be very, very successful in investing. Number 1, proprietary data. Everybody got their source of proprietary data, whether it's a CEO whispering into your ears, or you have a special lunches that people just tell you more information, or you have data that track what other people are doing. We are category number 3. We track everybody what they are doing. So yesterday in our trade through the night, we unraveled some hidden gems in the market. I'm very, very pleased with the trades that we done yesterday. I mean, yesterday we didn't do many, but we did about 15 trades last night alone in the heat of the battle. All right, that's a program I teach called the Trade Through the Night. So number 1, there are still hidden gems out there that we must invest to give us a higher rate of return, higher than whatever mortgage loans that you're servicing. I expect you're going to hit about 8% for your mortgage loan. 8%. I think that's going to be very, very painful. Now, can you feel the pain? Why don't you guys type pain into the live chat, and I know you can really, really feel the pain. Every now and then, I must kind of make sure you guys are really following through and not, pass time and waste time watching this live stream. It must be useful to you. So, can you type in pain into the live chat, and I know you feel the pain. Okay, the first one to feel the pain, 7 from Germany. And I see Casey Mac. I see Jay, you feel the pain. Calvin, feel the pain. All right, don't worry, feel the pain right now. Tonight, I'm going to give you guys the cure. Tonight, with our cozy live trading, and it's going to be fascinating. Every 2 weeks, I do the cozy live trading. I spend about, I would say I invest about 5 hours of my time just to make sure you guys are really game for it, all right? Really, really game for it. And, you guys really are well equipped. So you see, as I'm speaking, there's a scammer that just entered into the live chat on Facebook. All right, help me remove this scammer right here. Oh my gosh. Right? This scammer just posted. This is a wonderful payout. You see, the scammers are basically telling you send them 1 Bitcoin, and then they'll return back to you 10 Bitcoin. This is the standard. You see, another scammer just came on board also. Wow. 0.5 Bitcoin and all that. Oh my gosh, so many scammers out there on Facebook. Okay, gotta block them, all right? Gotta block all these jokers. Block them. This is live right now. No joking, all right? as they are scamming the live chat, I can see what they are doing. And I'll just add them to the block list. These people got nothing better to do in their time, and they go out there scam people, right? So if anyone tell you that, hey, you send me 1 Bitcoin and I will send you back 10 Bitcoin just to make sure I can receive your Bitcoin and send you more Bitcoin, that is a scam, for goodness sake. But unfortunately, many people fell for it. And right now in my live show, these scammers are pounding on the live chat, all right? So, what is the great news for today that I want to share with you? Despite all this bad news, I think we got a really, really fascinating viewpoint right here. And I want to read out from you what my teacher, Jim Cramer, is telling us, all right? So let's take a look right here. The Fed is winning against inflation despite red-hot June CPI data, Jim Cramer says. I've been following him for 20 years. Since I first started investing, this guy is always on the program already, all right? So right over here, what is the reason, the basis of his thesis? I think we have a real shot at putting in a short-term bottom here, given that the Fed Reserve can probably put through one more big rate hike and then declare victory. And that one more big rate hike is what? Is a 100 basis point interest rate hike that's going to take place on 27th of July. That will once and for all kill the problem of inflation, all right? So everybody wanted this very, very much. I think it is coming. It is a self-fulfilling prophecy, okay? So 9.1% is mind-boggling, right? So Cramer said that he believes inflation has peaked despite the red-hot inflation report due to recent declines in oil and other commodities. I don't think aluminum, copper, steel, and lumber should necessarily be considered consumer-oriented, but I will say this, look out below, these commodities are all in crash mode. They have dropped their price. And I will attribute this drop or the crash of all these commodities because our sleeping giant has not woken up yet. We're waiting for the Great China. Great China, knock, knock. Can you please wake up, all right? Step out of your zero COVID-19 policy and all of us will do just fine, okay? Okay, so all that is said by Jim Cramer. But before I end off today's video, I just want to share with you one more. I think it's very, very inspirational. I hope it will help you a lot. And after that, I hope you guys enjoy. But this is the challenge, right? When I'm doing a YouTube like this, are you guys sharing with your friends, with your villagers, your colleagues that you're watching me right now? Can you guys go out there and spread the word so that our YouTube can kind of go a bit viral, all right? So thank you guys for watching very, very much, and I will reward you with this final article. Oil price decline may be short-lived, Chevron CEO says. Market remains tight. Wow, tight. And the keyword that, kind of everybody chase different things. Some are chasing for technicals. They look at the charts. Some are chasing for commodities. They look at how the futures market is performing to precede the stock market. Some are looking at the cryptos market, trying to, read the stars and the moon alignment. And finally, what do we look out for? We pay attention to what CEOs of big public companies are telling us. That's what we need to do. No bullshit, all right? So here we go. And these words here said it best. The tightness in supply hasn't gone away. I think it's great for the economy that prices have moderated, but I also see the risk remaining skewed towards the upside. That is the key takeaway I'm going to give you guys. And then, I'll be firing off the trade right after this YouTube live stream. Those of you who want to know what trades I'm firing off an option trade. You need to know the strike price and the expiration date, all right? So this is where it becomes tricky. Options is a Nobel Prize winning formula. But the problem is this, most people got the combination wrong. Now, that is an art itself, so I'll be firing off the strike price with the right expiration date and with the thesis going into this particular article. Now, if you like to know what exactly is that, I encourage you, go right there, and is my finger pointing right place, or here, or here, or here. Go right here, all right. Go right here to the QR code, scan it, and you know exactly what I'll be firing off the trades right after this YouTube live stream, all right? It'll take about another 5 minutes. I'll be firing off this trade and let you know how to go and position based on this red box. This red box is very important, all right? And there are many, many ideas just behind this red box itself. Why the keyword is centered on this word called supply. We need to know the supply, all right? Very, very important, all right? We need to know the supply, and yep. And once we understand the concept of supply, then we know step number 2, which stocks we're going to invest in or which options that we're going to deploy. Then step 3, which is very fundamental in this present climate, is to let the price drop into your price. Let the market price drop into your price. So that is the reason why I launched the Don't Stop Believing trades based on the very, very inspirational song called Don't Stop Believing. All right? Every day firing off one trade, and if you are interested, you can join me. So I guess today we are done enough. You know, we kind of sum up. CPI, finally we hit an all-time record high, 9.1%. You've seen it firsthand. And number 2, you also seen it firsthand. Perhaps in your lifetime, you're going to see for the first time 100 basis point interest rate hike. That's 1% in one shot. That is mind-boggling. And finally, number 3, how do all this reconnect back to the energy crisis that we are having today? That detail will be shared with you in tonight's cozy live trading. All right, so those of you who are my students, please make sure you show up on time. I'm not going to wait for you. I start exactly on time, 7 p.m. Singapore time, and we're going to bash through all the way until 12 midnight. And those of you who want to know what trades I'm firing off, simply join me at the Don't Stop Believing Trades. Go and scan on the QR code. Thank you so much for joining me today. I hope you enjoyed the live stream. I look forward to seeing you again tomorrow. Thank you and God bless. Goodbye.